Thank you, Madam President. I'm going to share with the members of the Senate body a resolution urging Congress to permanently extend the Tax Cut and Jobs Act of 2017. Whereas prior to the government-mandated economic shutdowns during COVID-19 pandemic, the Tax Cut and Jobs Act of 2017 spurred a steady economic expansion and allowed the spirit of entrepreneurship to flourish while creating new jobs and opportunities for millions of Americans. And whereas the 2017 tax cuts resulted in a $1.5 trillion net tax cut and were followed by historically low unemployment rates, an increase in business investment, a $6,000 increase in real median household income over 2 years, which included scores of raises and bonuses for workers immediately after the 2017 tax cuts were adopted. And whereas more than 100 million American taxpayers from all income groups, but especially middle and working class American taxpayers, have enjoyed real tax relief due to the TCJA. And whereas 23 provisions of the 2017 tax cut directly relating to the individual income tax, such as reduction in personal income tax rates, the near doubling of the standard deduction, and the substantial reduction of the alternative minimum tax, the AMT, will expire December 31, 2025. And whereas the 2017 tax cuts reduced federal taxes for households across every income level, and this resulted in tax cuts of more than $1,500 for the average middle income earner. And whereas prior to the 2017 tax cuts, the top corporate rate for the United States was 35%, the highest among all nations in the Organization for Economic Cooperation and Development. And whereas 2017 tax cuts reduced the business tax from 35% to 21%, bringing the United States back to the average amongst the OECD member nation, and dramatically enhances the American competitive situation. And whereas the 2017 tax cuts set an annual wage cap of $10,000 on state and local taxes, better known as SALT, the SALT deduction, thereby broadening the tax base at the federal level and in many states, which caused the state level budgets surpluses and resulted in many states offering substantial tax relief. Whereas if the current 10,000 cap of SALT deduction is allowed to expire on December 31, 2025, the federal tax base will be narrowed. And whereas returning to an unlimited SALT deduction would be an incentive for many states to once again implement higher tax rates and spend at higher levels. Whereas the majority of working Americans supported the 2000 tax cuts to make it permanent, and whereas allowing the TCJA of 2017 to expire would result in massive tax increases on hardworking American taxpayers, a significant decline in American competitiveness, fewer jobs, reduced wage income for workers at higher prices. Now, therefore, be it resolved that the Senate of the state of Arizona urges Congress to permanently extend the TCJA Act of 2017, dated this 23rd day of March 2022, signed Karen Fan, President of the Arizona State Senate, Vince Leach, State Senator, Legislative District 11. Thank you, Madam President.
Thank you, sir. Senator